Hey everybody, I hope you're well. It's July 2022 and another quarter has passed. Boy, has this been a crazy year on almost every and all fronts. And if I were to touch upon all of these issues, this video would take hours. I've been told that I should start a video blog to address these things, but I'm not sure actually who would listen and how much time I have to do that. So let's discuss the financial markets. We are indeed living through unprecedented times. We just had the 20th largest drawdown or decrease in the S&P going back to 1961, over 60 years. And there was only 3 times where long duration treasury bonds lost money in the midst of those stock drawdowns, but they only lost a little. However, today, none were like this year. Never before have we seen treasury bonds lose double digits when stocks were in a drawdown. This has never happened in history. So clearly we are in uncharted territory. Add Bitcoin to the mix as it has crashed and it's had its worst month in 11 years. Now, this means a lot to us, even if we don't own any Bitcoin. I've been asked a lot over the last few years about owning it, and I've said no. I said no because Bitcoin creates nothing and has no earnings. The blockchain concept may be the future, and crypto might be the currency, but that's all a guess, so we stayed away. I'm happy we did at this point. This is causing firms who did take big bets on Bitcoin to be forced to sell as it craters, putting more weight on the system. Currently, the 2-year treasury bond pays more interest than the 10-year treasury bond. And the 2-year pays almost as much as the 30-year bond. This is upside down. It's called an inverted yield curve, just like our world, which always signals, not always, but most of the time signals recession. Now, I've already said that we're in a recession. They're not saying we are in one yet, but I believe we are in a recession. Now, how's this for an upside down world? Have you heard of the forecast that the Fed is going to cut rates January 23rd, January 2023, less than 6 months from now, but they haven't finished raising rates yet? What? Have you also heard that the Fed is admitting that they made a mistake, that they didn't realize that this was happening? That's baloney. I knew it was. My colleagues knew it was, but the Federal Reserve didn't? How could you have faith in this, any of this, when they're blatantly lying? There's no way that they didn't know what they were doing. So, I said above that treasuries have never in history lost this amount of money during stock market declines like we've just recently had. We are in what I call, again, an upside down world for more than the reasons that I've stated here. In the midst of all this insanity, things can not only stay bad, but get worse. But alternatively, if the Fed stops raising rates and decreases rates and oil prices and higher prices subside, and a very important factor people don't seem to be talking about, China must stop shutting down every time someone gets sick. This is the new normal. If this is the new normal, our supply chain and GDP will be destroyed since 60% of our economy is based on goods coming from China. I'm not sure how much pain China would endure if they stopped sending some percentage of our goods our way, but I know our economy would be in big trouble and already is. If things remain the same, we're looking to raise a bit of cash when and if we finally get a rally above 400 to 420 on the SPY. If things change and start to improve, we'll also be ready to get back in. I'm not sure of how many of you realize what we've done this year. We've essentially correctly predicted this decline and have raised between 40 and 60% cash in your accounts. I know your accounts have lost money since December, but if you can find me an advisor that has raised 40 to 60% in cash to protect their clients' assets, I'd really like to know. Because I bet 10 to 1 odds, no one will find one. We are aggressively trying to protect our assets. I played golf with a friend who's a partner at a large local firm. They manage $17 billion in assets. They're approximately 95% invested in the market and only 5% in cash. I don't know about you, but I'm glad that's not where we are. If you have any questions or comments, please don't hesitate to reach out to me. And if there's anyone that you can refer to me, that would be fantastic. I appreciate it. Have a nice day.